Hey everyone, and welcome back to the channel. Get ready because today we're talking about a monumental shakeup in the business world that's going to reshape how we think about our workplaces. We're diving into a massive deal worth about $2.2 billion that brings together two giants in the office furniture industry, HNI Corporation and Steelcase Inc. This isn't just another business transaction. It's a strategic move with huge implications for companies, employees, and yes, even your investment portfolio. I'll be breaking down all the details from what shareholders are getting to why this merger is happening right now and what it means for the future of work. Stay tuned because the most exciting part, including the massive premium Steelcase shareholders are pocketing, will be revealed at the very end of this video. You won't want to miss it. Let's jump right into it. On August 3rd, 2025, HNI Corporation announced its plan to acquire Steelcase Inc. in a deal valued at approximately $2.2 billion. This involves both cash and stock, giving Steelcase shareholders a stake in the combined future. Specifically, if you're a Steelcase shareholder, you'll receive $7.20 in cash for each share you own, plus about 0.22 shares of HNI common stock. Based on HNI's closing share price, about $50.60, this deal values each Steelcase share at roughly $18.30. That's a pretty sweet deal. The market reacted quickly. Steelcase's stock skyrocketed in pre-market and morning trading, with shares jumping anywhere from 40 to over 65%. On the flip side, HNI stock saw a drop of about 9 to 25%, which can happen when an acquiring company announces a large acquisition due to immediate costs. Once this deal closes, HNI shareholders are expected to own about 64% of the combined company, and Steelcase shareholders will own the remaining 36%. This transaction is set to finalize by the end of 2025, pending it gets the green light from shareholders and regulators. But why is this merger such a game changer? We'll get into the incredible reasons next. This acquisition isn't just about combining two companies, it's about creating a dominant force in the evolving office furniture sector. HNI is known for its workplace furnishings and residential building products. Steelcase, founded in 1912 in Grand Rapids, Michigan, has been a global leader in designing office furniture and workspaces, even having ties to legendary architect Frank Lloyd Wright. The combined entity will be led by Jeffrey Lorenger, HNI's current chairman, president, and CEO. And here's something important for their communities. HNI will keep its corporate headquarters in Muscatine, Iowa, and Steelcase will keep its headquarters in Grand Rapids, Michigan. Plus, the Steelcase brand itself will remain intact. So why are they doing this? The companies highlight several compelling strategic benefits. Complementary strengths. HNI's operational excellence combines with Steelcase's design innovation. Steelcase is always focused on how people work, with their me plus we framework for balancing individual and collaborative spaces. Broader customer reach. Their combined geographic footprints and dealer networks are highly complementary. This means they can serve more customers across a wide range of industries, including small and medium businesses, large corporations, healthcare, education, and hospitality. Accelerating initiatives. This merger will help them deliver more advanced solutions to customers faster. A key driver behind this deal is the acceleration of return-to-office trends. As more companies bring employees back to physical workspaces, the demand for new, flexible, and high-performing office environments is booming. Steelcase has already seen strong order growth from large financial services and technology companies, confirming this trend. The financial future of this new giant looks exciting, but there's a specific number that investors need to watch closely, and I'll share that detail in the next segment. Let's talk numbers because that's where the real excitement is. The combined company will boast a pro forma annual revenue of approximately $5.8 billion. That's massive, creating a true titan in the industry. For context, Steelcase alone reported about $3.2 billion in annual revenue in 2024, with a net income of around $81 million. For the first quarter of their 2026 fiscal year, Steelcase saw sales grow by 7%, reaching about $789 million. HNI, on its own, recorded about $2.5 billion in sales for 2024 and approximately $667 million for the first 6 months of 2025. Bringing these two together creates an absolute powerhouse. One of the biggest benefits here is the expected annual cost savings, or synergies, of about $120 million. These savings are projected to come from areas like optimizing their supply chains, consolidating shared services, and streamlining production processes. The combined company is also expected to achieve a pro forma adjusted EBITDA, a key measure of profitability, of around $745 million. HNI has a proven track record for successful acquisitions, like their 2023 acquisition of Kimball International. They demonstrated their ability to drive earnings growth and expect Steelcase to follow a similar path, boosting non-GAAP earnings per share starting in 2027. This isn't just about getting bigger, it's about getting more profitable. The total value of HNI's shares currently stands at approximately $3.2 billion, while Steelcase's total value of shares is about $1.2 billion. This new deal implies a valuation for Steelcase that is approximately 5.8 times its trailing annual adjusted EBITDA, showing a confident valuation from HNI. Now, no big deal comes without its considerations. Like any major merger, there are always regulatory hurdles to clear and integration challenges to navigate. While HNI CEO expressed confidence in smooth regulatory approval, some legal investigations are underway regarding the deal's fairness to shareholders, which is common in large mergers. This is a long-term play, with the office furniture sector projected to grow at about 8% annually through 2032. This growth is fueled by increasing demand for ergonomic, sustainable, and tech-integrated solutions, especially as businesses continue to adapt to hybrid work models. We are almost there. Before I wrap up, I'll reveal the exact premium Steelcase shareholders are getting, a number that truly highlights the value of this deal. So, what does this HNI and Steelcase merger truly mean for investors? This is a clear and confident bet on the future of the physical office space. Even with flexible hybrid work models, companies are increasingly recognizing the irreplaceable value of physical offices for things like collaboration, team building, and fostering innovation. Steelcase's own research highlights the limitations of full-time remote work, including reduced collaboration and higher employee turnover. This merger perfectly positions the combined entity to provide comprehensive solutions for these evolving needs, from satellite offices to flexible home workstations. HNI's history of successful acquisitions, like the one with Kimball International, demonstrates their solid ability to execute these complex integrations efficiently and generate value. The company also has a strong financial position, expecting its debt levels to return to pre-acquisition figures within approximately 18 to 24 months after the deal closes. This merger brings together two highly respected and widely recognized brands in the industry, creating a significantly more diversified and resilient leader. By combining their extensive dealer networks and product portfolios, they'll be able to offer a broad range of products across various price points and cater to diverse industry segments. This is a compelling opportunity for anyone looking for growth in the industrial sector, especially given the clear and sustained demand for evolving workplace solutions. The acquisition also has a significant impact on the local communities where these companies operate, particularly in Grand Rapids, Michigan. Steelcase has been a pillar of that community for over a century, contributing significantly to its economic identity. The fact that HNI plans to maintain the Steelcase brand and its Grand Rapids headquarters is seen as a positive signal for local employment and innovation. HNI expanding its board to include 2 independent Steelcase board members further ensures continuity and integration at the highest level. And now, for the moment you've been waiting for, the exact premium Steelcase shareholders are receiving. This deal implies a purchase price of about $18.3 per share for Steelcase. That represents a massive premium of nearly 80% over Steelcase's closing price of about $10.20 on the Friday before the announcement. An incredible return for those shareholders, truly reflecting the strategic value HNI sees in Steelcase. This acquisition is truly a masterstroke in the office furniture sector, poised to lead the hybrid work revolution. It's a powerful testament to the idea that even in a rapidly changing world, the physical workspace remains incredibly important for how we work, learn, and live. And that's the complete picture of the HNI and Steelcase merger. I hope this broke down all the details in a way that's clear, concise, and helps you make sense of this big news and its implications. What are your thoughts on the future of office furniture and these major industry moves? Share your opinions in the comments below. If you found this video helpful and insightful, please give it a big thumbs up, subscribe to the channel for more valuable market insights and exciting business news, and don't forget to hit that notification bell so you never miss an update. Your support helps us create more content just like this. Thanks so much for watching, and I'll see you in the next one.